Hey YouTube, I just put up a video recently that I took down the same day that I put it up because as things settled down on Wall Street and the dust cleared, I could see that I wasn't necessarily always reporting fact, I was reporting talk, and there's a difference. So that will never happen again, but with this situation, it's very historic, all of this, and it's moving so fast, it's hard to keep your eye on the ball. So I'm glad not many of you saw the other video that I put up. And for those of you who did, I was under the correct impression in my first video that the John Chambers interview on CNN promised not to downgrade the 4 AAA corporations that are under S&P's rating system. Okay, and those 4 companies are Automatic Data Processing, Johnson & Johnson, Microsoft, and ExxonMobil. Now, short of downgrading them along with the full credit, faith and credit of the United States, I didn't see this as a real walloping downgrade. Okay, now when the market started freaking out on Monday, and I read what S&P was implementing in terms of what it meant by a downgrade, I assumed this was more than what anybody had anticipated. I have never been through this. No one's ever been through this. It's unprecedented. So I thought, well, maybe this was more than anyone expected. And that's how I reported it. It's like, well, this looked like a toothless downgrade. Now it's got some fangs to it. Well, no. All S&P did on Monday was it downgraded Freddie Mac and Fannie Mae, who were, I mean, that was inevitable. And then it downgraded some farm lenders, and it downgraded 32 banks that deal in government securities, and is basically, it downgraded all the paper that they deal with, which in effect downgrades them, okay? And then there were 3 clearinghouses that got downgraded. And I thought, well, maybe that's more than anybody expected, and everybody's going insane. It was all very contradictory on Monday. It was just mass psychosis. On the one hand, there were tons of people running for gold. And on the other hand, there were tons of people all over the world running for treasuries. Now, if anyone's taking the downgrade seriously, they're going to think interest rates on a lot of things are going to go up, okay? That the debt paper is being called into question, that no one's going to want to buy it, and so the interest on the yield has to go up to make make it an attractive investment for someone to buy. A nation runs on its debt paper. If its debt paper is considered worthless, it has to make it worth the person's while to buy it, all right? So if there's a downgrade, you're expecting the interest rates to rise. So you wouldn't buy treasuries until you felt that it had reached the maximum level where it's a truly attractive investment. But there was such a demand for treasuries, and that the interest rates on treasuries have been low all along, lately, quite low. And the stampede toward treasuries all over the world drove the interest rates even lower. So much for a downgrade increasing a higher, triggering a higher yield on all this. It's just, it hasn't happened, it isn't happening, and it's not the headspace of the people who are in a panic. The one thing you can tell about the markets is, okay, this is them at their worst. They're having a nervous breakdown, and they're behaving at the raw instinctual level of pure reaction. And what are they doing? They're running to treasuries as a safe haven. They're getting out of stocks, and they're running to U.S. treasuries. Okay, that is not a bunch of people afraid of S&P's downgrade. Okay, this was called a downgrade-driven market panic, and it was anything but that in terms of where the money was all running to. Now they're running to treasuries because they got nowhere else to run, and because everybody else's bonds in the other countries and stuff just aren't doing as well against what we've got. So it's all relative. I've said that before. And no matter how low something sinks, if it's on top of everything sinking even lower, then it's the best buy. And that's just all there is to it. And it's all there's ever been to it with a modern global economy like we've got. Now, on the other hand, you've got the people rushing to go buy gold. Okay, well, those people rushing to buy gold, they don't do that when interest rates are rising. Okay, so if they thought the downgrade was going to have any real impact on the economy, they'd say, well, the rise in interest rates will firm up the dollar. And usually you buy gold as an inflation hedge. Okay, so the people rushing to buy gold aren't taking seriously that there's any short-term danger of higher interest rates. Okay, so in the short term, you're not going to see Wall Street doing anything where it's in a panic about S&P and what it's been up to. Okay, they're going to move whatever they've got that might be related to what they're, they've converted from AAA rating for Fannie Mae and Freddie Mac and blah, 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 blah. But they're leaving the 4 top-rated corporations on their list alone. And that means pensions are safe. That means ordinary people are safe. There was nothing to freak out about Monday. And no one, the one rational thing about the gold is Bernanke was going to meet on Tuesday about interest rates. Interest rates are artificially low from the Fed. Anything that the Fed can influence is just down to almost zero. Okay, that's just really a fake interest rate. Okay. That's a really phony, contrived interest rate figure. But everybody on Wall Street watches the Fed. Everybody lives and dies by what they do and what they announce. And if you're buying gold, you're thinking Bernanke's going to come out and say he's going to extend the low interest, and that will weaken the dollar. And so gold is your best bet if you can buy it in bulk. If you can buy enough that you get it at some kind of discount from these middlemen, because the middlemen make most of the money. But I don't want to get off on that right now. If you want to go buy gold, buy gold. And the dollar will get weaker. It's ridiculous to think that we can survive these times without massive currency inflation. Of course we're going there. That's where we're headed. So if you want to buy gold and you got a cheap way to do it, then go for it. So anyways, gold went way up. Treasuries did well. Mortgages attached to treasuries did well. So the interest rates are not just remaining low after the S&P downgrade, they're even lower. So much for a downgrade-driven panic. Okay? This thing seemed to be more concerned about what Bernanke was going to say the next day. And so, it's like God speaks. He gets up. He had 3 dissenting votes on his board about keeping the interest rates, holding interest rates where they are. Now, if some rumor got out that there's been some arguing about this, then I'm willing to bet that most of the panic was about that and not about the downgrade. Okay. And that panic reverberated into Europe because they're all mobbed up with our money, and then in Asia because they're mobbed up with all of our money on both sides of the Atlantic. And one thing leads to another. And now the 634 loss, net loss on the Dow for Monday recouped to 400 plus, the next day, or as I'm sitting here talking to you. And now as I finish this video, the Tuesday rally has been wiped out and then some. I think the Dow closed at 520 points down. Banks got hit hardest today all the way around the world. Goldman Sachs got hit 10%, lost 10% in value in one day. keeping interest rates low doesn't help the banks at all, and committing to 2 years of this for them is really bad news. So there's also a rumor, or was a rumor, about the French banks and funding. Every bank has a capital requirement. Not all, they don't keep all their money in a safe. You know, Europe, the capital requirement is so complicated. It's the Basel Accords, and there's Basel II, and then there's going to be Basel III. So there's such confusion about what their banking system is about, and whether or not they're good for their debts. And good, I mean, it boggles the brain. It requires artificial intelligence to keep up with the data. And their misperception that the panic on Monday was all about a downgrade put rumors flying that the French banks would be in trouble because they're in a much flakier shape than anything over here. I don't think the French understand our system. I don't think we understand theirs, at least not perfectly. And this was just the perfect storm, okay? And none of it was anything substantiated. What it was is nobody knows. And when you don't know, you get out. They interviewed Goldman Sachs today on CNBC, and I mean, the bottom line is he didn't know. Nobody knows. And that's the bottom line. What's the explanation? Well, nobody knows. And so it's a global economy. It's a global financial community. Financials got hit hardest. Everyone's scared. It's all fear trading. And it's, you know, it isn't even supposed to make sense. It's just everyone wants to feel safe. Everyone wants to go to their safe place. Everybody needs a hug. Yeah, all the red spots on the board. They have this board that lights up. All the red spots are the you know, that they've been selling those stocks. You know, it's been a sell-off, and then the green spots are the where people are buying. And there's this ocean of red, or even like a universe of red, and like maybe 5 green lights on the board, and that's where my money is. Okay, I've done fine. You know, I feel like I'm in the eye of the hurricane. And I feel like I know what I'm talking about with this stuff. And yet, it's so easy to get confused. The Fed should not have committed itself to a policy that's avowedly inflationary over the next 2 years. And the board was right to dissent on that. And I think once that news came out, that the forces worried about that have overtaken the forces that just dogmatically and reflexively go for where they think the low interest rates will be lucrative. And so there's no way that Wall Street dogma won out over common sense this time. And then Europe is in such turmoil, and Japan is in such turmoil, that if any talk of the downgrade triggered this, it was a bunch of stuff that was just an accident waiting to happen anyways, okay?